Good afternoon, MMTs. This is the S&P 500 once again. This is where we were shorting up here at 1370. This is the longer trend line from 2009, the 2010 pullback, and now the 2011 pullback, where we did not undercut the daily moving averages, and I will show the daily ones as well. This is the long-term trailing rising 200-day simple moving average on the daily chart. And when we got to a bottom, we could not break it. We got to short-term oversold with a double bottom. We said it's time to get net long. Stocks were short-term oversold. Greece has played its role. The austerity plans, the end of the quarterly buying plans, the daily simple moving average plan, and we've levered back up to this neckline. In 2011, that was your first support level, and we bounced and made an all-time high to where we said we were overbought, which is all on stockmarketfunding.com before the fact analysis, not after the fact. One of the things that's key about a simple daily chart is that the last time we had these four moves, these daily moves up, that there was also a holiday week. And then we came back down and tested these double bottom lows, slightly a little bit higher. Well, we had 3 up days during the 4th of July week, and you have end of the quarter buying and end of the month buying. Once that buying leaves, we're going to see where these markets are made of. But however, that's the daily S&P 500, where we said we were short-term oversold on the S&P. The thing about it is you will deal with this long weekly chart. And we've got great support off of that diagonal line. The problem is that the S&P 500 must get a closing price above the blue line, the 10-week and the 20-week. Yes, we've had a percent DS short-term oversold, as we said. We've had 1 week of buying in the month of June only. And we started this reversal way back over here. The reversal downtrend, I cannot tell you that it's totally broke yet because it has a lot of work to do yet. We have to get above, it's slightly breaking it right here, this diagonal trend line, and the upside week, and this week is not calculated because we have to go to Friday, but most of the move been on extremely low volume. We were due for a good little rally off the bottom. You will have to deal with the earnings in July. Corporate earnings. Until I have a closing price above here, it's going to be this trend line right here. We'll just take this one across here, MMTs. Until I consolidate and close above it for a number of weeks and get above these moving averages and they turn around, that makes this whole movement up from short-term oversold with a nice trading pop up, because you don't go straight down. You have to have nice up days. You had those other weeks that came up and they sold off. This one's not doing it. However, once we get outside of Independence Day and get into earnings, we're going to see what these markets are really made of. Okay? Either we come back down and test these bottoms. That's 1250 on the S&P. That's this line right here. That went to that top right there. That's going to be the upside resistance into these weekly moving averages. The weekly moving averages have to flatten out and turn around and turn up. Until then, we're in a volatile trading range from the bottom up in selling into resistance. Buying at support, selling into resistance. Buying at support, selling into resistance. Because until we close above here, that's all we can do is buy and sell into resistance. Buy and sell into resistance. That's the price volatility. Buy and sell into resistance. Applying the stop management. Applying the stop management. Risk management. Risk management is number one because it keeps you in the game and it will take you through this wild volatility. Knowing when to buy off the bottom as knowing when to sell short off the top. We remain vulnerable in the S&P 500 until we can consolidate and close and these moving averages turn around. The earnings season that's coming up and after Independence Day is over will tell the tale.